check this out. Gold has given some 43% and silver has given 48%. If you compare this to Nifty, it's just 6.5%. So in this episode, we're going to answer 3 questions. 1, could the market go up like another 100% from here? Once we answer that, we need to know which one to buy, gold, silver, or both, and how much. So that's the second question, how much? And the third question is, how the hell do you actually buy it? Do you buy physical gold and silver, or do you go digitally and just buy it online?
And most importantly, I will give you
THC framework. This framework will tell you how much of gold or silver to buy and how much money you can actually make. The year was 1991. पूरे देश के पास पैसे ही नहीं थे.
We were in deep trouble. Our forex reserves were so low, we barely had enough to cover 2 weeks of imports.
And when Indians don't have money, सब कुछ चला जाए, the only thing they have is gold. We pledged tons and tons of gold, physical bars of gold, to the Bank of England and the Union Bank of Switzerland. This was actually flown in, and this footage is actually real. That got us out, and in fact, if you look at the economy, we have not looked back. The economy has actually done well. So gold really helped us. It's also true for you and me. When we run out of cash, our mothers have gold stashed away somewhere that even she has forgotten. So this is true for all banks in the world as well. This is how central banks across the world are buying gold. Do you see 2020? That, if you remember, is when we had the corona crisis, and we have a little dip there. But after that, it's gone up a lot. And this is driving demand. As soon as that happens, other investors follow suit and they buy gold as well. Central banks buy gold for many reasons. One reason is, for example, it's a store of value. Another reason is they want to move away from USD. And then there is the biggest reason of all, Trump. But this doesn't answer the question of silver. If all central banks are buying gold, then why are silver prices going up? Silver is used in multiple heavy machinery industries, and most importantly, EVs, semiconductor chips, and all these other things, some of which I don't even know. People are buying silver because they need to actually use it in real world application. And that's where the buying is coming from. So it's important for you to note that most of the demand for gold comes emotionally. For silver, it's always been application. It comes from industries. Now, there's a lot of hype around EVs. If the EVs demand goes up, you know whose demand goes up as well? Silver. Because silver is used 2x more in an EV vehicle than in normal ICE vehicles. So this means if gold and silver both are going up, we know the reasons for it, we should buy both, right? Look at this chart over here. This is what gold looks like, and this is what silver looks like. So we went to the World Gold Council's website, and it has a really cool calculator. Here, it gives you the correlation or the connection
between gold, silver, and Nifty. You see, it's 0.749 in green between gold and silver, meaning a strong positive correlation. मतलब सोना चांदी साथ साथ में चलते हैं. And buying both metals together isn't really a good idea if you're looking to diversify. And in the case of Nifty and silver, it's 0.28 in red, meaning the price movement happens in the opposite direction. Nifty and gold is almost 0%. Essentially, it means there is no correlation.
Now, correlation and all is great, but it doesn't really answer our core question. Should you buy gold or silver? But to answer that, you have to understand the currency effect. Take a look at this. So one thing you should know that all gold and silver that we get in our country is imported. The World Gold Council says about 82% or 86% is imported, and silver is about 92% imported. Now, when we say imported, we pay in dollars, and here's what it looks like. So let's suppose we as a country are purchasing gold, and let's make the numbers a little easy. 1 USD, and let's see what happens. So it's the year 2007, and 1 USD is equal to roughly 40 INR. I want you to remember this. 2007, 1 USD is worth INR, and we are paying rupees for the dollar to buy the gold. Now, over the next few years, if you go through the next few years, I'll make a line up over here. In 2000, and this is the same gold, 2022, 1 USD was worth about 80 INR. Notice, assume that gold has not changed in price. It's the same price. Because we bought it in dollar denominated terms, that 1 USD has actually appreciated, INR is depreciated, and this 40 has become 80. So our investment has doubled just because of this currency effect. Now what this means is, gold to ऊपर जा ही रहा है, but currency effect की वजह से और better हो गया है. What I mean is that gold is going up, but along with it, to sweeten the deal, the currency is also depreciating in our favor. So that effect is also happening, and I have actual numbers here. Gold in the last 30 years has given a 7.6% return in USD. But if I include this effect, then the return is not 7.6, it's 11%. Same thing for silver, last 30 years, dollar return is 6.4%, but if you include the currency, it's 9.8% return. Now this USD INR thing is great, but it doesn't answer how much silver and gold to buy and whether the prices will double from here or the market will fall. That I will explain very clearly in the THC framework. But just before that, you should know how to buy it, right? Should you buy physical? Should you buy digital? Which is the best way to do? Let's quickly look at this chart.
First, you have gold and silver ETFs. You buy and sell them on the stock market just like shares. They're super liquid. But remember, you'll pay brokerage fees and a small annual expense ratio. Then we have digital gold on fintech apps. It's convenient to buy tiny amounts, but you pay 3% GST upfront, meaning your investment is down the second you buy it. On top of that, you'll eventually pay storage and delivery. This is also fine, but you should just know these costs. Then there's the mutual fund route. It's a fund that invests in ETFs, but the catch is you pay double the fees. You pay for the fund and also the ETF that it holds. And you only get the end of day price. The advantage here is if you feel that a manager can actually manage a fund better, then maybe that route makes sense for you. And finally, we have physical gold and silver. It's tangible, but it's the priciest option by far. You lose money immediately on GST. Then there could be massive making charges. Then there's a locker fee, right? That's the cost because you have to store this thing somewhere. So depending on what you value, there's an option for everyone.
On the other side, when you compare it to silver ETFs, it's a lot better because one, the liquidity is super simple. You can buy and sell it very quickly. And all these charges do not exist. You are only paying these charges. So there are some charges, but it is relatively lesser. But the downside of an ETF is that the physical feeling, emotional of going to mama papa and saying, "Dekho, maine silver coin kharid liya hai," that does not exist. So if you're buying it for an emotional connection, maybe the ETF doesn't make sense. Now comes the most important part, the THC framework. As soon as something hits a high, the person over here says, "Ooh, look at this." This includes labubus as well. Look at this. This is true for anything from houses to gold to silver, which is why we made this video. The entire point of this video is so that we can teach you the THC cycle, the hype cycle. The hype cycle is everyone's talking about something because it's cool right now. Who was talking about gold 4 years ago? No one, because it wasn't cool enough. But the fact is, this doesn't make Nifty bad or gold good or silver bad. It makes our understanding of assets wrong. Everything follows a cycle. So why should you worry about whether you should buy in gold or silver? The answer is you should probably choose one of these assets.
Do not invest both in large quantities. Keep it small, around 5-10% of your portfolio. Or direct 5-10% of your monthly SIP into ETFs of each. But probably as a beginner, that's a good place to start, not more than that initially.
And do not expect returns in the short term. Think of this as really long. All this narrative in the press saying, "Ye 48% return ho gaya hai," this is all nonsense. You are right here in the hype cycle, and this hype cycle is messing with your brain. Do not listen to the hype in the media.